aspects of real estate investment trust in the upcoming year of the rabbit. What actually beholds for REITs? What actually entails for REITs? Do we get a recovery that we are and have been expecting for a long time since last year? Or do we get more of the worst that we saw last year? So, ladies and gentlemen, what is expected of REITs in the year of the rabbit? Well, I was interviewed in Lianhe Zaobao, the prestigious Lianhe Zaobao, just last week, and this is what I say. As you can see from there, the indicated yellow boxes is what I say. The interpreted aspect in English are this. One is that I express a wish that as interest rates climb higher, and global growth slows, I hope REITs will be more razor sharp and their acquisitions, in their acquisitions, because in the last 3 years, there were many acquisitions done. There were 23 equity raising, and guess what? 22 out of the 23 REITs would have lost money for you in their placements. I'll give you the data later. All right. Two is that REITs should be connivance and aligned the interests of the shareholders with theirs. REITs should not just focus acquisitions or any endeavor just to generate the manager fee. What about shareholders? Okay. And then the third one, ladies and gentlemen, is that I hope that REITs are able to downsize their acquisition. And for once, maybe we go back for the first 10 years, where REITs came into place in Singapore, where REITs basically adopted growth, both in the share price, both in their assets through organic growth. That is actually ensuring that they manage their assets better, getting maximum efficiency, greater optimal occupancies, and better reversionary rentals, rather just focus. Let's go back to the pandemic year 2020. In that year, you have one, two, three, four, five, six REITs came out to raise money to fund the acquisition. That includes Prime REIT, Maple 3 Industrial Trust, Fraser Centrepoint Trust, Maple 3 Logistics Trust, Ascendus REIT, and Capital Land China. Now look at their respective placement prices, as you can see in the third column, ladies and gentlemen, compared to the current share prices of the respective six REITs at the end of last year. Oh my God, the losses range from as high as 60 cents or a 21% loss for MIT, to essentially a primary, which the placement price is 0.957. Oh my lord. Oh my loss, really. The loss is 4.92 cents or a loss of 51.41%. What a way of capital destruction. Now let's look at the second slide, ladies and gentlemen. This represents all the placements done that were done in 2021. And how many REITs did the placement? Well, that year, 2021, REITs actually funded acquisitions or made announcements where acquisitions totaled 12.4 billion. Now, 15 of these REITs actually came to the market to raise funds. And look again, the third column are the respective placement prices. And look again at the prices as of last month, that means end of last year. And guess what? Oh my God, 14. Yes, ladies and gentlemen, in the new year of the rabbit, where this is the year that favors a smart, witty, and quick-minded investors. So in our investment classes, that's how we train you to be better, smart, quick investors, and to be able to look for inflection points during the REITs when they announce their results or in some of the actions, some of the acquisitions that they do. But let's look at the verdict. Last year, this is a table that shows the top 10 REITs with the most severe losses. So you see that the second column shows you the year prior end price, and the third column shows you the price end of last year. And you can see some REITs, oh my goodness, Digital Core REIT, Manulife REIT, and Prime REIT has lost for you shareholders, up to more than 50% loss. And EC World REIT, Lippo Malls, Capital Oak Pacific REITs lost for the investors 42% in a single year. Okay. Now, as you run through the list, ladies and gentlemen, one of the key traits that I've identified for you is that REITs in doing acquisitions, in doing the financing of the acquisitions, not only must they be honest and forthright with shareholders, whether in a long term, not just a short term, just to justify the viability of the acquisition, right? That these acquisitions are indeed beneficial to shareholders, and therefore the placement price that they took are actually of good value. If not, what happens at the end of the year? After 1, 2, 3 years, you can see for yourself. They have lost money. Have investors lost faith in them? Oh my goodness. You just look at those three REITs or those six REITs where prices have fallen 40 or 50% in a single year. Tell me in your comments below whether you have actually lost faith in these REITs. Okay. Now, in our investment classes, we have taught more than 8,000 over high net worth individuals, family offices, index funds. And the constant feedback that we get is that, hey, REITs is supposed to protect and help you to grow your wealth, not to bale. So in the year of the rabbit, one must be sharp-witted to identify these REITs that are not doing or not running their portfolios in alignment with shareholders' interests. Of course, it is my wish that they will do so. They will wise up, and spruce up and be more open and be as honest as what the year of the rabbit normally does. Your second wish, Gabriel, is in the year of the rabbit, shareholders' interests should be well protected by REIT and REIT managers, correct? Is it really that many REIT managers, have actually not taken into account or not fully taken into account, the consideration and protection of minority shareholders in the past 1 year? In the past year, you can see, ladies and gentlemen, in various warnings over our YouTube channel, in our investment classes, we have warned investors of possible collapse, possible inflection points of REITs way before they happen. So take a look. For example, we warned that office REITs are in trouble more than a year ago. That's why we actually did the YouTube channel, US offices value threats. We already questioned that a year before, and then every 6 months we follow up with that. And the answer has been perennially yes. Now, in the year of the rabbit, do we look for an inflection point, a turning point? Well, follow us closely on our video or join our classes. Then the second thing that we actually talk about is the hard truth. That is actually, other than the fact that 22 out of 23 REITs lost money in private placements for you, those high net worth individual, we save them a lot of money. When they come for our classes, we told them not to take those private placements. Now those are privileged allocation previously, but right now they are almost assured of losing money if you go in blindly, because the margin for safety, and we calculate the margin of safety for you. So that's why we actually talk about the hard truth in our YouTube video. And your third wish, Gabriel, in the year of the rabbit, is that REITs will go back to the first 10 years of the REITs history. Is it practical? Considering the fact that Singapore is so small and most of the REITs basically have to expand their base overseas in order to grow their DPU? Or is there a catch here that most you see, my fellow REIT investors, most of the REITs try to sell you the koyo, that only through acquisitions, only through issuing of new shares, then they can grow. If they grow geographically or mentally, it's good for you, the investors. Now, at GCP Global, we've been telling you this is actually not quite correct, because when they grow and issue new shares, you investors must be able to actually capitalize on and be able to actually generate higher DPU through the newly acquired assets. Now, how many REITs actually give you a follow up on the acquired assets? How to what level of incremental DPU do they actually add in? What they do is that at the end of each quarter, they tell you that, okay, DPU or revenue actually increased because of this new acquisition. But did they say whether this acquisition has lived up to the early expectation? Hmm. So you see, one of my best wish, ladies and gentlemen, you can look at this particular chart again, okay, where I compare Maple 3 Pacific Pac Pacific asset, versus that is the old Maple Tree Commercial Trust versus Cecilia Reid. You can see that Cecilia Reid has been hit really badly in the last 3 years where China has closed. And yet, look at the relative share price. How can Cecilia Reid, being in only one market as China, actually the downtrend by Maple Tree NAC actually underperformed even Cecilia Reid that is close in China for the last 3 years. Goodness gracious. And you don't need to look much. You go back and see my video on what's happening to that in my YouTube video where I've actually said that shareholders of Mapletree PAC are not getting a good deal. And true enough, Mapletree NAC, the message I think to the REIT manager and the sponsor is this, that if you're looking for an acquisition, don't try to sell a Goyo story, okay? Where if you package Mapletree NAC selling at a discount into Mapletree PAC platform, which was previously selling at a premium to discount, what happened? Okay, it will collapse. And true enough, look at Mapletree PAC share price. End of last year was $2. At the end of this year, it's 170. It's down 15%. Okay, right. Despite the acquisition, so you tell me, is the acquisition really beneficial? Of course, you may say it's only for 1 year. So let's wait this year and see how it plays out. Okay? Because at the end of the day, investors who are trained by us at GCP Global are very sharp in identifying whether in the overall picture the acquisition makes sense. Okay? Of course, you may say that the mandate has to be widened geographically to incorporate assets because Singapore is too small. True. But mind you, to a Maple Tree PAC, right? It's clear, right, to the manager that there are business parks to be acquired overseas. There are offices to be acquired overseas. So you can still maintain your mandate to expand regionally or even globally. But looking just assets, you don't need to acquire the assets from Mapletree NAC. But I guess what? What is done cannot be undone. So let's hope, essentially, that will be less of this. But so far it's been fun for us because at GCP Global classes, you can see, right? Now all our students, this is actually our last three classes, including the trip that we did to Hangzhou before the COVID-19 actually closed down. You can see that most of them are actually not as young, okay, or maybe young at heart. Most of them, the hair is a little bit non-black, okay, but that suggests that these are the high net worth individuals that have money to preserve that invest in REITs. And for them to continue to have confidence in the REITs, they need to see and pick the right REITs. And this is what we do with our investment classes. Hope you can join us for the next class on 25th of February. Last but not least, you can see, ladies and gentlemen, when we actually do our classes, we also follow up with our investments meetings to CEO. So, for example, in the last 2 years, we have had lunch very and update constantly with Ms. Cecilia Tan, the CEO of Cecilia Reid. So, I mean, we have heard the barrage of bad news coming out from her as how the company actually manages, but yet despite China being closed, Cecilia actually still outperformed Mapletree at PAC. Think about that, man. When Mapletree PAC essentially did were not able to even outperform Cecilia despite being bogged down, by the COVID-19. So do join us for our classes, and once again, like and subscribe to our channel, and be updated every week via